All right, so I want to go over really quickly what's going on with the US dollar, Bitcoin, and maybe we'll find another trade. And we're going to go over what happened with our recent trade, when we took profits and why. And yeah, let's dive into it and I'll show you on the inside. Okay, cool. So right now we're looking at the DXY. There's a few things I want to go over really quick because it may dramatically impact how we trade for a little bit. So this is the DXY. We can see, we broke this downtrending level of resistance, and this is where we are today, around 109.16, with quite a bit of volatility for the U.S. dollar. So right now we're actually coming up to an extremely strong level of resistance. Historically, we always got either support bounce or resistance rejection around this area. And right above that is the next level of resistance at a 120.33. And the technical target for this breakout that we've got going on is at 117.007. The reason why I think we may not be reaching this target and we soon either will have consolidation or a rejection is because of the information that we received yesterday with the CPI information and the PPI information that we received today as well. But basically what's going on is the CPI gives you lagging information. It's based on the previous month, whatever happened in the previous month. So if you went through all the stock information that compiles the information for the CPI, you can see during this current month, the past few weeks, we're about 14 days into this month, that crude oil, copper, nickel, all the assets that compile the information for the CPI are actually crashing right now. So the next time we receive that CPI information, it's going to show that there's a inflationary curve. And what that means is basically they will most likely stop increasing the rates with the rate hikes that they're going on right now because they won't need to. And if they kept pushing those rates, even though, things are seeming to start to correct in terms of the inflation, they could cause it's called a debt spiral. It's a lot to explain, but basically the U.S. won't push the rates to go very high without causing unnecessary economic damage. But anyways, so I'm thinking, now this is just theory. This is not financial advice, but I think that we're about to peak with this uptrending price action with the U.S. dollar. So that is bullish for Bitcoin. So we may start seeing some pumps going on in the future for Bitcoin. Going over to Bitcoin chart. Sorry, I'm in logarithmic right now. It's going over to the 4-hour chart. Let's zoom in. Let's get this all fixed. All right. So I made some adjustments to my trend line. I made it a little bit more accurate. I zoomed out a bit and I realized even though we're still technically in a bear flag, the support level could have been raised. So I made that adjustment to sync better with the 4-hour time frame rather than trying to sync it with the 1-hour time frame. And it gave us a lot more accurate information because we see now that we dipped under here during that large volatility during the meeting, and we just got bought right back up. So now we need to focus on what's going on in the 4-hour chart before making any action with a potential short position rather than focusing on the hourly chart. Longer time frames are a lot more concrete and safer to trade off of. With yesterday's trade, I'm going to go over to the hourly chart. So we entered a long position off of this inverse head and shoulders, and the technical target was roughly around this area of interest right here, but we were tracking the momentum, and once the momentum broke, we had to exit our position with profits. So we got it with profits. We didn't hit the target that we wanted, but it's trading. That's what happens. So you just got to be reactive. Make sure you have you're tracking momentum when you're in a long position, and have an alarm set so that you're notified when this will break. So you just click on your trend line, for example, when you're tracking uptrending momentum, and just click on this little button right here, and you can add an alert, and you'll be notified any way you want to. I have mine set to text me with a unique text tone, so I know it is not a random person, and it's an actual really important trade. In terms of finding a trade right now, if you're in a short, I would start tracking the momentum. It does look like we broke some momentum here, so we may see a bounce soon. However, we may see the price action go down further and retest this uptrending level support that we're just looking at in the 4-hour time frame, and then continue to go back up. Until then, we have to look for a formation to trade off until then. But right now, nothing really other than this tiny little broadening wedge that I'm seeing here. You can trade off this broadening wedge if you like, but when the support is horizontal like this, I don't like to trade off of the broadening wedges. I'd rather trade off of descending ones because they have a lot lower risk. Anyways, let's see if we can hunt for a trade for you guys, because that's why you watch my channel. So let's take a look. Let's see. Nothing for Theta. Same kind of concept. We do have this downtrending level of resistance, though, and this horizontal level of support. So we could trade off of this here. The technical target is, if we're being conservative, we're going to go for, it's going to be roughly around here. With the risk-to-reward ratio, let's see if it's worth it. Pull out the long position tool. Let's say we entered off of the, you typically want to wait for a confirmation bounce, but you may not get that. You may have to look for a wick candle instead to enter. So it's about 1 to 1.45. You wouldn't want to be consistent with those kind of risk-to-reward ratios, and you may get stopped by the VWAP right here. So if you were to start to see resistance at the VWAP, I would take profits off of this immediately. This is a trade where you stand to lose potentially 1% and stand to win 1.45%, so you do not want to use very much. I would say about only 1% of my trading portfolio I'd put into a trade like this, and I would only use about 3x leverage. Maximum 10x if you're experienced with understanding those confirmation bounces that I talk about. If you don't understand confirmation bounces and you want to learn more about them, I actually have a lesson on that in the Investor Share course in the link down below in the description, so you can dive in and learn everything you can with technical analysis through there. Let's look at Cardano. We do have a descending formation here. Same kind of formation as Theta. Yeah, but let's see what the risk-to-reward ratio would be off this. It's 1 to 2, so it's a bet. This is a better bet. So if I were to pick between ADA and Theta's, Cardano's and Theta's trade, I would pick Cardano's because the risk-to-reward ratio is better. You stand to lose less. You stand to gain about the same. So picking between the two, I would focus on Cardano. So I'm going to set an alarm for this trend line right here for when we start seeing price action get above it. So that's the only time I need to pay attention to the chart, is roughly around when we hit this trend line. So I'm going to create that, and now I'm going to be notified whenever we cross this. I'm not looking to short right now because we're near a lot of core support, so I won't be shorting this trade because it's a little bit higher risk. So I'm going to focus on it being a long if this were to occur. Anyways, if you guys have any questions about this, you can reach out to me in the Discord. That's everything I got for you. I'm sorry I won't be able to do a video for you guys tomorrow. I'm going on a vacation with my wife. Just going to visit the falls in Niagara Falls and enjoy Clifton Hill for a bit. But yeah, guys, I will still be able to answer you guys through Discord, help you out through there. Please subscribe and have yourself an amazing day. Thanks, guys.